Gentlemen, good day and welcome to the NOCIL Limited Q2 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. V.S. Anand, Managing Director of NOCIL Limited. Thank you, and over to you, sir.
Thank you. Good afternoon and a very warm welcome to everyone present on the call. Along with me, I have Mr. P. Srinivasan, our Chief Financial Officer, and SGA, our Investor Relations Advisors. Hope you all have received our investor presentation by now. For those who have not, you can view them on the stock exchanges and the company website. Let me begin by providing an overview of the company's overall performance during Q2 financial year 24. In Q2 financial year 24, the various external challenges of geopolitical tensions, recessionary trends, and aggressive dumping from China have impacted sales volumes and realization. For the quarter, we witnessed a revenue degrowth of 11.5% to rupees 351 crores compared to the sequential quarter. On a sequential basis, we had a marginal degrowth in volumes on a quarter-on-quarter basis. Similar to large parts of the chemical industry, due to the lack of domestic demand in China and the lukewarm demand in their predominant export markets, there has been a significant influx of heavily discounted imports from China, even in rubber chemicals, which has put pressure on product realization. As we strive to increase volumes on the one hand, it is important that we also preserve value in the process. Consequently, we witnessed an impact on our volumes. The volumes in the domestic market remain flattish as we continue to build on our business with our domestic tire customers and penetrate the non-tire sector. The company experienced a decline in export volumes, which can be attributed largely to the global recessionary trends coupled with aggressive pricing from China. Now, quickly on the industry scenario, the domestic tire industry remains robust, with the Indian automotive industry continuing the growth trend with stable demand from OEMs. While the passenger vehicle sector has reported positive growth for the period April to September year to date versus the corresponding period the previous year, the commercial vehicles have reported flattish sales for corresponding periods due to a subdued monsoon, higher interest rates, and new emission norms. But with increased infrastructure development, we expect the commercial vehicles to also gain traction. The Indian tire industry has ambitious plans to increase their top line by 2.2x in the next 10 years, and we are well positioned to partner with them in their growth story. Coming to international markets, the latex industry is still dealing with market challenges. The rubber gloves industry in Malaysia, for example, is operating at about 50% of their peak levels in the year 2020 compared to the year 2021 to mid-2022, a combination of lower demand and stiff competition from Chinese rubber glove manufacturers. On the tire industry front, the lower demand in Europe and the US has also impacted tire exports from Asian manufacturers, including Indian players. While on the one hand, the higher interest regime, geopolitical tensions, and the recession overhang continue to hamper demand in the international markets, we continue to work with our strategic global tire players to gain approvals and are positive about increasing our global presence in the medium to long term. On the very important topic of sustainability, I would like to share that we have completed the submission of data for the Carbon Disclosure Project, or CDP, for the year 22-23. We have also committed to SBT, or Science-Based Targets, and as part of the Global Reporting Initiative, or GRI, we will shortly be publishing our sustainability report. You may already be aware that we have been accorded the Silver Award for the EcoVadis Sustainability Ranking. While I just shared about our work on the sustainability front, we are proud to announce that NOCIL yesterday bagged 6 awards at the second Sustainability Conclave. The awards were given for the Best Sustainability Report 2023, Best Sustainable Initiatives to Improve EHS Environment, Health and Safety, Best Sustainable Initiative to Improve Energy Efficiency, Reduction of Poverty, promotion of education for economically backward sections, and supporting rural healthcare. This is a proud moment for us, and I would like to congratulate the teams on this achievement. That is it from my side for now. I will hand over to Mr. Srinivasan to give you an update on the financial performance.
Thank you, Mr. Anand, and good afternoon to everyone. So now let me take you through the consolidated financial highlights. On the sales volume numbers, volumes for Q2 FY24 is 127, taking a base of Q1 FY20 as 100. On the revenue front, the net revenue from operations for Q2 FY24 stood at 351 crores from 397 in Q1 FY24, a degrowth of 11.5%, out of which the volume degrowth is about 4%, and the balance selling price degrew by 7.5%. Net revenue from operations for H1 FY24 stood at 748 crores from 898 crores in H1 FY23. On the operating EBITDA parameters, for operating EBITDA parameters for Q2 FY24 stood at 45 crores as against 56 crores in Q1 FY24. EBITDA margin for Q2 FY24 stood at 13% as compared to 14% in Q1 FY24. Operating EBITDA for H1 FY24 stood at 101 crores as against 165 crores in H1 FY23. Now coming to the profit before tax PBT parameters, PBT for Q2 FY24 stood at 37 crores as compared to 47 crores in Q1 FY24, sequential degrowth of 10 crores. PBT for H1 FY24 stood at 84 crores as compared to 138 crores for H1 FY23. On the profit after tax parameters, profit after tax for Q2 FY24 stood at 27 crores as compared to 34 crores in Q1 FY24. Profit after tax for H1 FY24 stood at 61 crores as compared to 102 crores in H1 FY23. With this, we would like to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Neer Jimodia from Anvil Research. Please go ahead.
Yeah, good afternoon, sir. So I have two questions. So one is, sir, when we look at the commentary of the largest Chinese rubber chemical player in their latest quarterly results, they were mentioning 2-3 important facts that the markets such as Indonesia, Vietnam, Thailand have started showing the improved demand. So the demand have picked up there. Even if we see their July-August tire output data, so that is up close to 15% on a YOY basis. And the September month also shows the increase in their ASPs, like average selling price of close to 23%, with the commensurate increase in the aniline prices, which was close to 19%. So just wanted to understand your thought process of our volume growth, because in the past we have been seeing that we have received the approvals and the Chinese have been very aggressive in terms of selling into the markets which had a slowdown in order to maintain their market share. So when can we see the volume growth coming to us? Because first half had virtually no volume growth or the volume degrowth. So when can we see volume growth coming to us based on the approvals which we have received from the customers?
Yeah, thanks. Thank you, Neera. So I think first, when you spoke about these Southeast Asian markets, yes, very much. I think there also we've been gaining volumes in those markets based on the approvals that we were also talking about. I think we mentioned this also in the last call, and we continue to monitor that in terms of our export share. And I think we spoke about how there was a split between the latex and the non-latex part of the business. and while the latex part has come down due to the latex demand overall going down, we see that the non-latex part that also comprises largely of the tire sectors and the tire companies has been going up. So that's kind of compensated for that part that's been going down. So these are all trickling in from the gradual approvals that we are receiving. Now, when you look at year to date, and as you said, the volumes have not grown. This is also on the back of pretty much a very strong quarter. That was the first quarter of the financial year of last year we're talking about, and we see a catch-up that's kind of also happening in the last few months. So I think that's how we see it. And talking about the prices, yes, there was a correction during the quarter. There were prices finally moving up in some of the other raw materials temporarily. And I think that also we saw some price adjustments on that front as we went ahead. Yeah.
Because if we compare ours with them, so let's say H1 of China Sunshine and H1 of this calendar year 23, I think they have shown some 10% volume growth. Even last year their base was also very high. So on that 90,000 tons of volume, their volume was close to 1 lakh tons. So they have shown 10% growth. So just wanted to understand, like, even H2 would see those transition in terms of the approvals coming from the customers, and we will see the volume growth only coming to us in next financial year, or that could be a slightly earlier process.
So I just take that last part, and then I come back again. I think Srini will also talk a bit about the numbers. Yes, we do see things trickling in even in this financial year itself. Yeah.
Just to add a bit, when you compare the China Sunshine performance vis-a-vis H1 CY23 vis-a-vis H2 CY22, the sequential...
I'm comparing H1 to H1. So H1 CY22 and HY CY23. If I'm not wrong, their volumes have grown by 10%.
Okay. So basically, when we were looking at the China Sunshine performance on an overall basis, what we found is, they have grown by 10% is what you're saying. We are probably de-grown by 5%.
Yeah, correct.
Yeah, that's because of the base effect which we had in, as Mr. Anand has explained to you. But on a performance per kg or on a performance per EBITDA basis, etc., we believe we are slightly ahead, better than them. That's what our analysis displays at.
Yeah, and also, Nirav, my hunch is that they had a pretty low first half, especially with COVID and the lockdown. So there is a base effect. These are some reasons that we also ascribe to the return in the volumes.
In fact, just to add a bit, their EBITDA performance dropped by a percentage, and our performance did not witness a similar drop, including though they included export subsidy was one of their key income contributors in the profitability. Despite that, our overall profit drop vis-a-vis China Sunshine is marginally lower than their drop.
Got it, sir. And sir, just a small clarification on one of the presentation slides where we have shown that our volume on an annualized basis for FY24 is showing an index of 128. So last year we were at 126. So this is the guidance we are providing, or this is just an number which we have annualized based on the H1 performance?
This is based on annualized performance till September.
Okay. So this is not a guidance which we are providing.
Guidance is something which we will address a little later.
Okay. Correct. And sir, one last question from my side is, let's say in this quarter and the last quarter, if you can share the export percentage in terms of the quantities and this fall, because in one of the slides you have mentioned that the fall in the volumes is because of the fall in the export volumes. So this fall in volumes is because of the latex part of the market, and we have continued to grow on the latex part, and a slight addition in terms of our volumes from the latex market. So let's say we were doing 100 at the peak, where we are currently in terms of the latex market as per the Q2 run rate.
Okay, just to give you a very broad directions, we were normally in latex market, we were 30% in the overall export basket, latex market. that has trickled down to about 12% or thereabout. Whereas the non-latex, which was earlier 70, is about 85, 88 or something like that today. So that's a good thing which we are trying to build up. In fact, this is basically comparing with the COVID times where the peak latex demand was there. So we are comparing with that performance. So that was in say 2021 thereabout. Around that time, if you compare, I think we are down by almost 60%. But what is heartening is that we have improved that much volume loss in the non-latex market, and which is more sustainable is what we believe.
Absolutely. And sir, just a last clarification on that export percentage in terms of the quantities for Q2 as well as H1, if you can provide. Out of the total volumes?
I think it will be more or less in the range of 30-35%.
Okay, for Q2 as well as for H1?
Yeah, more or less in that range only.
Got it, sir. Thank you so much for answering the question, sir, and I'll join back in the queue.
Thanks.
Thank you. The next question is from the line of Aditya Khetan from SMIF Institutional Equities. Please go ahead, sir.
Yes, sir. Thank you for the opportunity. Sir, my first question is, we had witnessed the increase in import volumes from China and other countries, so to the tune of 20% till date. So this has also impacted our spreads and our overall numbers. So do you think this can continue in second half also? We can see more imports because they are still to ramp up the 20,000 tons antioxidant plant. And spread numbers might continue to remain depressed for second half?
Sorry, we were able to just about understand what you were trying to say initially, but the latter half is not audible. Could you just again, can I just take your line and repeat yourself, please?
Yes, sir. Sir, my question was that, sir, we had witnessed increase in imports from China, so by around 20 to 25% till date for this fiscal. So because of this, our spreads numbers have also have taken a hit. So do we expect a similar trend in second half, or because of increase in export volumes that spreads could improve from here on, or what could be the trend like?
So maybe for the full year trend would be difficult to comment, but at least clearly what we have seen is that there has been some kind of corrections in the last few weeks to a month or so, where the original drop in prices, there has been some correction on the positive side. So I hope that will be maintained or not taken down any further. Yeah.
Okay. And sir, our competitor also, so they had, so recently only they have expanded the capacity, and in one of their presentations they had mentioned they are still operating at low utilization level. So we can see further increase in imports trend in FY24 and continuing in FY25 also.
So our understanding also of that drop in prices that we saw was also due to a build-up of inventory, and also certain inventory reaching shelf life points. So I think there was also a need to push that into the market. That inventory having got out and they are operating at more demand-linked basis, we see that while imports can still go up, but I don't see that kind of price corrections to potentially happen at this point in time.
Okay. And sir, you had also mentioned...
Sorry to interrupt you, Aditya. By chance, are you speaking from a speakerphone? Because your sounds very muffled.
Hello? Is it audible now?
Are you? Yeah. Management, can you hear him better now?
Now the second, maybe that sounded better. Yeah.
Okay. Go ahead. Sorry to interrupt.
Sir, my second question was onto the tire demand in Europe. You had mentioned in your opening remarks that the tire demand in Europe continues to remain weak. So, sir, in our total export volumes, how much share is to the European companies? And, sir, is there any new capacities coming up in Europe or in China going ahead?
So I assume the question is for whether tire production is coming up. So if you look at our exports, about close to 20-25% would be in Europe, about 50% in Asia, and the balance in the other parts. In terms of new capacities, we're not really hearing of significant expansions in these markets.
Okay. Sir, the China Sunshine, which was planning to add a 30,000 ton capacity by December end, so largely that would not come into the market and that would be used for internal accruals. So that would maintain the demand supply balance going ahead. Is that the understanding correct?
So this is okay. So was your question on capacities pertaining to rubber chemicals or was it tire industry? Because I thought you spoke about tire.
So for the tire industry, they are adding a 30,000 ton capacity. So that would come by December end. So they are using it for their captive consumption. So is this understanding correct? So that would not change materially the demand supply balance?
Gentlemen, which product you are talking about? Is it insoluble sulfur?
Antioxidant, sir. They are adding into antioxidant.
Okay. That is there. Okay, but we have not seen the... We have to wait for the outcome when they start the commercial production. Then we'll take a call. I think they have in a product called TDK, they are already there. So we are not sure which is the other antioxidant they are planning to come.
Okay. Thank you, sir.
Thank you. The next question is from the line of Nitesh Dhoot from Dolat Capital. Please go ahead.
Hi team. Good afternoon. Thank you for this opportunity. So my question is, first on where are we in terms of finalizing our capex plans on adjacencies? If you could give some color there.
Yeah. So capex plans on adjacencies, we continue to look for opportunities on adjacencies. We are taking a structured approach to the whole thing. Nothing at this point that we have to say that we're close to something as yet. So I think as and when we get there, we will be able to share something on that front, Nitesh.
Sure, sir. And you had mentioned last time that you've started sampling products for approvals from the additional sites of customers, and the approval cycle being around 3 to 6 months there. So where are we on the product approvals?
So some of them we've already even started supplying during the course of this year, and some are coming in. They would start in the next quarter or next few quarters. So that is something that is ongoing. Yeah.
Right, and just one last thing. What was the capacity utilization for Q2?
About 65%.
All right. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, my first question is that on a YOY basis, our volumes have grown by 8%. So wanted to know the growth in domestic as well as exports. Have both markets on an overall basis grown, or because you said on the exports market the non-latex part has grown. So how is it? How is the breakup in domestic versus exports?
Ma'am, I think there is a correction here. We have not grown on a YOY basis that much. On a YOY basis, maybe marginal degrowth is there.
Sir, YOY basis, your overall volume growth has grown by 8.4%.
From this data you've deduced it from the investor slide?
Yeah, ma'am, if you see the investor slide number 3, in Q1 FY23 was 151, 117. 268 is first half, and this year it is 260. So 8 points we have down. So that's why there's something, that's the reason we are trying to understand your clarification.
Sir, I am seeing 2Q FY23 versus 2Q FY24. So 117 versus 127.
Second quarter, basically. Okay.
Yes, sir. Second quarter only.
Quarter, we have grown in significantly because the low base has been corrected now because of the addition of additional volumes traction coming in from non-latex products.
Yeah.
So you mentioned you have grown the exports market in the second quarter on a YOY basis. What about the domestic?
Domestic, we are not degrown. We have a marginal, very small growth. Very small growth.
Sir, could you mention how much growth in domestic versus exports?
I think exports has, the base was much lower. So exports has increased significantly because of the additional business coming from the non-latex product as we are trying to consolidate our presence in the international market. Domestic is more of small products here and there, some marginal growth.
Sir, how much?
It's in single digit only, ma'am.
Exports growth in single digits?
No. I think we are talking about domestic growth in single digit. Export is very significant.
Okay, sir. So secondly, on one hand, if you see the current scenario, rubber accelerator prices are rising, specifically in the last month, and then demand trends remain strong in India, and also auto volumes are growing in China. On the other hand, Sunshine has expanded capacities, and also we could see higher dumping when their new capacities come into production. So considering all these factors, on a sequential basis, how do you see the volume and the pricing trends going forward?
So, I think while there is, like you mentioned, the domestic demand continues to be robust. We still are positive along with the exports that we can still look ahead for some positive volume growth in the year. As far as domestic market also is concerned, I think we are competitive enough and we are able to compete and keep our space amidst the imports that come from China to a large extent. So I think along with these capacities, we will still be in a position to compete here.
Sir, on the exports front, you mentioned the non-latex part has grown. So are we seeing China Plus One playing out, and have we added any new customers or new locations specifically on the exports front in the first half?
Yeah, I think this is also pertaining to some of the earlier questions and the discussions we had, and that is precisely the thing that I mentioned also in my initial speech about working with strategic global key accounts, and this also is linked to the China Plus One, where we see some good traction. So that's where we describe how the non-latex part of the business is also shaping up well.
So have you added any new customers in first half?
Yes. So while most of the international customers are already our customers, I think it's about getting newer products in, at the same time getting newer manufacturing sites, and that's what it is.
And sir, on the you have added a product in FY20, the TBBS product, which was an import substitute. So wanted to understand what kind of utilizations in that product as of now, and by when can we expect full utilizations for this product?
So we have kind of, there's been a slow pickup of that import substitution. And we do not, as I also mentioned in the last call, they're not very significant.
We are going within the same overall range.
Okay. And so in the current quarter in 3Q?
Same overall capacity utilization range.
Okay. And so in the current quarter in 3Q, are you seeing higher pricing pressure in either domestic or exports market to continue?
So while for the immediate quarter, like I mentioned, there have been some price corrections. But I would expect that with lower demand in China, we would still see, we could expect pricing pressure to continue.
So the volumes that you have held back because of the frenzied falling prices, so that is also expected to continue for FY24?
So as we look ahead, at least I think it's difficult to comment really on a long-term basis, but at least in the short term, that is, we are looking at least for the next quarter and a couple of quarters, we see that volumes should trend slightly on the positive side.
Okay, so thanks and all the best.
Thank you. The next question is from the line of Harshil Parekh from Aquitas Capital. Please go ahead.
Thanks for the opportunity, sir. Sir, my question is that we have mentioned in the presentation that we are holding back volumes due to lower prices, right? So, first thing I wanted to understand, is it for the exports market or is it for the domestic market also? And the second point is that is it not dangerous for us to give up volumes in such a situation since the customers may get used to alternatives, making it more difficult for us to bounce back?
No, not really. So I think if you look at it, we have not stepped out of businesses or anything of that sort. It's just kind of a quarterly position that you take in terms of what volumes you want to take, vis-a-vis whether you actually create value or do not. So it's a call that you take on a customer-to-customer basis. Yeah? So it's not specific only to export, but it's a combination of both. Yes.
Okay. No, sir. So I just wanted to understand, since we have already mentioned that this is sticky business and long-term contracts, right? So if our competitors enter the customer's wallet share, would it not make it slightly difficult for us to bounce back, to get back those volumes?
Yeah, so as I've also said, it's very marginal, yeah, and these pluses or minus tend to happen from one quarter to the other.
Okay, sir. Understood. And sir, my second question is that earlier also we have mentioned several times that supply chain diversification is a key tailwind for us, and given our moderate starting positions, especially in the global markets like US and all. So my question is, why are we getting impacted with the demand slowdown in the industry? So I would have understood it if we had a very high market share like 40-50%. But since our starting positions in global markets are very low, then why is the demand slowdown impacting us so drastically?
Yeah, so the demand slowdown is also with existing customers, right? So I think while we gain approvals and we enter into customers, even existing customers who take their requirement goes down. So there seems to be a marginal impact that shows up there. While the gains happen, sometimes they take much more longer to add into the volumes.
Understood, sir. Understood. But sir, since we are at a very small starting positions, we would also be getting more traction from the newer customers, like which should be ideally offset by a slowdown in the existing customers. So is that not happening?
We are seeing that happening to a certain extent already, and I think it should gain more traction as we go along.
Okay, sir. Understood. And sir, one last question. If you see the gross margins in this quarter has declined, primarily because the output prices are falling higher than the input prices. So is there any specific in that? Why are this pricing going down? Apart from the dumping from China, is there any other specific reason for that?
So when you look at it, there was, apart from the price erosion that happened, there were also some raw material price corrections that led to this. Both of it is a combination of both.
So just to summarize it very differently, I think the sales drop was a combination of volume drop as well as the price corrections, which has been communicated. Even in raw material also, we got some raw material price corrections downward. I think the only thing is the corrections of the price was much higher than the raw material corrections. So that had an effect, and that had an effect on the overall gross margin effect as compared to sequential quarter.
Yeah. So, sir, just wanted to understand that the correction in the final output prices were higher. So is there any specific reason other than the pricing impact by China? Is there any other reason for that?
So again, it's a question of when you see the correction, again, it's a demand supply, and sometimes you also have a lag effect of raw materials, right? So you tend to get in the lower price raw materials at a later stage. So there's also a combination of a lag effect.
Understood, sir. And sir, the import volumes, if you see for the domestic market, they have grown, whereas our volumes have not grown. So are we losing some kind of market share? Because as you mentioned, we are also holding back some volumes. So is it resulting in our losing slight market share?
Not really. I would say it's kind of more or less stable from our evaluations.
Okay, great, sir. Great. And sir, you mentioned in Q4 that the volumes are expected to pick up from current levels. However, if you look at the first quarter of FY24 as well as the second quarter, they are still below the Q4 levels. So, are there any, again, specific reasons like the market is so much volatile that we earlier had some orders in Q4 which got revised going into Q1 and Q2? Is it something like that?
No, so you're talking about Q4 of last year versus Q1 and Q2 of this year.
Yes. So we mentioned the Q4 levels, the volumes will improve from the Q4 levels, Q4 of FY23.
Yeah.
But in Q1 and Q2, they are still below the Q4 levels.
Yeah. So from an index, we are slightly lower. Yeah. Yeah, like we mentioned, so we have, as we said, while the pressure on realizations were there, we also decided to play it on the volumes front. Yeah.
Okay, sir. Understood. Thank you, sir. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Jayesh Parekh from GMP Capital. Please go ahead.
Good morning, everyone. Sir, my question is on China Plus One strategy. Now, as you know, the China is controlling almost 80% rubber chemical market currently. Currently, China's internal consumption has also gone down since last almost 3 to 4 quarters. Their consumption is going down. Simultaneously, globally, everybody is working under the pressure of margin. So I feel that why everybody will follow China Plus One strategy when their own margins are under pressure. So everybody would like to buy from a country where prices are better. So do you really think that China Plus One strategy will work at least for next 2 to 3 years unless and until there is a change in Chinese economy itself, or change in the global economy itself in terms of all parameters? I personally feel that China Plus One, chemical industry has been thinking about China Plus One strategy since last 3 years. But in reality, you are the better person to answer whether it is really working.
Yeah. So thank you, Jayesh, for the question. I think if you were to respond to this question, I think, and when you look at the global market, you can't brush it with just one brush, and you can't, say this is the approach across the world. Again, when you look at customers, you can't use the same brush. So I think there are customers who take this seriously, many of them, and there are ones who do not take it seriously. Like you said, when you're up against the wall, then you do what is to be done at that point in time. But I must say, there are many customers who are looking at this whole performance very strategically. And they don't see that this short-term impact on pricing. They see the value of more long-term partnerships, supply reliability, more out of geopolitical tensions that may arise. So I see that we can't, your answer to your question is it's a mix of both. And it's for us to work with those customers where we see that this China Plus One will really gain traction. And that's what we're doing.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Abhijit from Sharekhan. Please go ahead.
Yes, sir. I have one question. Basically, we expanded the capacity with the focus to have a higher global market share. But last couple of quarters, given the tough environment, I would like to understand that what is our strategy to gain the market share further overall, if not for FY24, what is the overall long-term volume growth guidance? So except for 21 and 23, again, the volume growth challenges are coming to us. So want to understand on this, when we will see the optimum utilization of the expanded capacity.
Okay, so Abhijit, your audio was not clear to us, but let me attempt, and I think you'll need to come back if you I've not been able to answer your question. But I think so while we have said we still see that we will have positive traction on volumes coming up. If you look at the last financial year, there should be at least a positive traction there. But coming back to your question on when will we hit full utilization, that is, earlier we were able to give a certain guidance based on a certain stability that we saw. But given today's uncertain environment, it would be very difficult to put a finger and say this is where we will hit it. And I think that's something we will, as we get more clarity, we will be able to share an update with you on that.
Okay, so will we see any kind of volume growth in FY25 if not in FY24?
Can you, your voice, sorry, can you just, we could hear you clearly again.
Yeah, can you hear me now?
Abhijit, sorry to interrupt you, but could you speak from a headset because your voice is not very clear. Sure. Go ahead and you can continue.
Yeah, can you hear me now?
Yes, much better. Much better, thank you.
Yeah, so my question is that not from the perspective of FY24, but like what kind of volume growth we can see, maybe 25, 26. I understand that is a difficult question to answer given the current scenario, but given our interaction with the customers, is there any sort of visibility where that gives us confidence in terms of long-term volume growth?
Absolutely, Abhijit. I think while we will continue to face short-term challenges with different global situations that we have, definitely in the medium to long term, 25, 26, with the engagements we are having with customers, we are quite positive the volumes will grow. We are well positioned for that. At the same time, we have long-term ambitions to grow our market share globally. So we are quite positive about the volume growth.
Okay. And one more question, if I may ask. The pricing has been quite volatile. We have seen in the quarterly results also that impacted our margins as well. So once this China dumping thing is over, do we see, can we reach 40% plus or more than 45% kind of EBITDA level again going forward?
40%?
40% EBITDA.
Sorry,
40 rupees per kg, 40-45 rupees per kg kind of EBITDA on per unit basis.
I don't know how you, gentlemen, how have you derived at 45 rupees a kg? We are not able to understand that. What we can say is that by and large, if you see the last 3 years' performance or last 4 years' performance, when you look at overall basis, I think we are more or less in the same range. We are not materially differed. In fact, what we can say, 21-22 was a little better year. 22-23 was marginally down. 23-24, we still maintain that we are in the correction mode. So the real benefit will come in, and I think what Mr. Anand was trying to guide is that there will be quarterly aberrations, but given the objective what we have and the visibility of the interactions we have with the customers, long-term stability is definitely assured for this business. So therefore, the results automatically will stay in.
So if I rephrase my question here, once this China dumping issue is over, what kind of sustainable margins we can make?
So have you given a guidance on the margins?
We are not given a guidance. We never give a guidance on margins.
I'm not asking from the guidance perspective, but I just want to understand because there is a lot of volatility in prices. If that would have not been there, once it ends, maybe 1 year down the line, I just want to have a perspective on margin trajectory. It is fine if you don't give a specific number also.
We will address it separately.
Okay.
You can refer the question to SG and then we'll refer it in due course of time.
Sure. Thank you, sir. And wishes for the upcoming Diwali season.
Yeah, thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Praveen Kumar from Aquitas Capital Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity. I had one question. I was trying to put together various things which you have said over the last few calls, including today's. One is that you are seeing supply chain tailwinds, in terms of supply chain diversification. Secondly, you are one of the largest non-Chinese producers. So you should be one of the first port of call for many of these global tire manufacturers who are looking to diversify, right? Thirdly, you have also mentioned in today's call that, a lot of the global majors are already your customers. And in fact, what you're trying to do is sell them more of your existing products. So putting all these together, one would expect that the timeline for conversion of orders for new products to an existing customer, right? Because if they are already your customers, they might have already done due diligence on several of your other products. And what would be required is incremental diligence on your new products, right? So putting all this together, one would have expected greater traction coming through into your export volumes and, into your overall volumes as well. So just wanted to understand how do we reconcile this and, with the performance that we have seen till date. Thank you.
Yeah, thanks, Ravi. So it's again, the answer is a combination, and let me try and explain this. So what happens here is typically as you start, even though you're existing customers, for every product, it is the same process of approval, because you are approving a product from a particular site. If you go to another site of theirs, again the approval process goes on. Maybe it could be slightly curtailed here and there a bit, but the process is more or less very similar for every site, where you start with a small lab sample, then you start with a trial lot. All of this needs to be run in production, tested, approved, and then you keep going up in the scale as you go along. So that takes a bit of time. On the other hand, while, as you rightly said, we should have seen a lot of traction and things should start coming in, but also the overall demand per se has come down. And as they start shifting some shares to us, their overall demand comes down. So they do it at a gradual pace, but it takes a little while longer. So I think it's a combination of both that, you don't see the sudden traction that's able to come in.
Understood. So should we, putting what you're saying, reading through what you're saying, should we expect that there should be a greater kind of a snowball effect somewhere down the line in terms of your export volumes when your traction finally starts paying off? Is that what one should expect?
Yeah, that's normally the expectation, but I would keep my fingers crossed and hope that happens here.
Okay. Is your what you're saying is driven by? Because again, we had done a channel checks for the last several years, and one keeps hearing that NOCIL is one of the more quality and reliable suppliers, right? So I'm just trying to understand what is behind your, apprehension in being more positive about this.
No, I'm very positive, and I think like I mentioned, I think it's just that the external environment and the uncertainty that I'm kind of, let's say, positive with some caution. Yeah.
Okay, understood. Thanks for the answers.
Thank you. The next question is from the line of Nilesh Ghuge from HDFC Securities. Please go ahead.
Yeah, can you hear me?
Yes, Nilesh, please go ahead.
Yeah. So just two data points. What was your specialty volumes contribution in Q2 to the total volume of the company for this quarter? And secondly, what was the percentage exports to the total revenue in Q2?
Yes.
I think it is much lower. We explained in the previous quarter that latex business has shown a downward slope. So therefore, the specialty percentage has dropped down. So it's below 15.
Okay. And sir, exports, how much was the exports to the total revenue in Q2?
I think we answered just some time back. It is somewhere between 30 to 35%.
Okay. Thanks, sir.
Thank you. The next question is from the line of Sailesh Raja from B&K Securities. Please go ahead, sir.
Yeah, thanks for the opportunity, sir. Sir, in US, anti-dumping is getting over next year. So if they don't extend it, how it will impact our volumes to US?
Which anti-dumping?
The tire industry, right? You're referring to the tire industry?
No, sir, rubber chemical.
There is no anti-dumping for rubber chemicals.
2017 it was there, sir. They have put anti-dumping duty on rubber chemical.
You're talking about the US, sorry?
US, yes.
Sorry. We misunderstood it as India. So that duty continues. So we expect that with the current situation it should get extended, because I think it's got bipartisan support in the US.
The second thing is, as far as from a revenue perspective for NOCIL, I would say it is not making a difference because today we are not charging any duty on the landed price to the US customers because there is a other source also besides China. In India and EU also is supplying. So EU is selling at without duty exports. So pricing advantage is not there as far as we are concerned. Maybe some volume correction, if at all in the worst case I might have.
Okay. So currently we are doing closer to 1,500 tons per annum. So what is our target we have for next 2 years?
Sorry, sir. Which volumes are you talking about?
In US, currently we are selling closer to 1,500 tons.
So 1,500 tons per annum, you say?
Yeah, per annum to US.
We have not declared any specific numbers to each of the.
So actually, yeah. So 3 years back we were doing around 500 tons, and that gradually increased it to 1,500 tons. So in last 2-3 calls we have mentioned that. Is there any target we have for next 2 years, particularly in the US market?
So we have given an index guidance for how the numbers are.
We have said from 100 to 300.
Yeah, we have given an index. So we expect that to. So we're still working with customers, and we expect that to continue to grow, Shailesh.
So the Americas today constitute 25% of exports today.
Okay. So we are betting more on adding new customers there or addition of locations from the existing customers?
Yeah, so existing customers, addition of locations is largely what is going to happen. Yeah. That means when you talk about global customers.
Yeah. Okay, sir. So my next question on the conversion cost side, particularly in the power and utilities. So is there further scope to cut down the cost?
So in absolute numbers, there is some reduction seen in the utility cost for the half year. So one of the reasons for the reduction in other expenditure, if you see the heavy results, it is because of the reduction in power and utility costs, largely because of the efforts taken by the operations team to improve the cost control measures and ensure that those are sustainable in nature. So they have done a lot of work, and that benefits is seen in the results.
Yeah. Okay, sir. Thanks.
Thank you. The next question is from the line of Nirav Jimodia from Anvil Research. Please go ahead.
Yeah, thanks for the opportunity again, sir. Sir, in terms of the utility cost which you mentioned, I think in the annual report we have mentioned that we have entered into an agreement with CleanMax for securing the hybrid power. So, and along with it, we have even installed a 66 kVA power station line. Last year our power cost was close to 178 crores. So with all these benefits in place and sourcing of an hybrid power, how much savings can we assume provided the current level of coal cost is there? So what sort of savings we can assume on an annual basis when the benefit of this hybrid power along with the installation of a KVA line fructifies fully?
So, Nirav, just to address a bit, I think when you're looking at 178 crores for power and fuel cost, which includes the coal, power, and the fuel oil, etc. Yeah. For FY23, that's what I think you may have referred from the annual report. Yeah. When you're the run rate as it stands today, we are probably, the way things are moving around, we are probably in the region of something like 15% savings.
And the entire benefit of the initiatives which we have taken has fructified, or still the benefits would continue in second half also?
So so we continue to, apart from CleanMax, there are also other initiatives pertaining to solar on-site that we do. We're also looking at cogeneration that will come in next year. So those are additional things that will come in,
Got it. Sir, one of the things which we also mentioned...
Sorry to interrupt you, Nirav, but could you speak a little louder? Your sound is very faint.
Now it's okay?
Yeah, it's better now. Go ahead, sorry.
So one of the statements also in the annual report mentions that we have succeeded at process engineering in terms of plant modifications to manufacture DCBS. in the MOR plant. So if you can just throw some light on this, because earlier, if I recall, we used to produce this product and we have stopped. So again, I think if we have made the modifications in terms of producing this product again, if you can just share the opportunity size or the market size of this product into India or in the export market, that would be very helpful.
Yeah, so this is always part of working with our domestic tire customers to look at opportunities to indigenize, and this is something that we also mentioned in the earlier calls, that we are looking at wherever possible to indigenize, and this is one example of that indigenization. But the volumes are not very big. It's also part of the package that we sell to our tire customers, so it goes along with that. I don't see very significant volumes coming from this.
It's more of a part of a sulfonamides product.
Got it. And sir, just a last clarification in terms of the capacity utilization, which you mentioned, 65%. So this is considering the debottleneck of 5 to 10%, which we have already completed, and considering 65% on the increased capacity, or you are taking the utilization pre-debottlenecking?
This is pre. Yeah. Some portion has been included, some portion is yet to be included.
Okay. Sir, just a last thing in terms of the export market. So you mentioned that our latex volumes have fallen, but the non-latex volumes have grown. This is predominantly the tire customers where we have penetrated in the export market. So if you can just share which of the geographies have seen this increase in the volumes from the non-latex side?
I think, Neerav, the address is very different. I think earlier we were referring to Asian market exports was 70% and 30% other than Asia. Non-Asia was 30%. Today Asia has become 50%. So therefore the other remaining 20% has gone to the Western world, EU and Americas. So that addresses the whole question there.
Okay. Got it, sir. Thank you so much, sir, and festival wishes to the entire team of NOCIL. Thank you.
Thank you very much.
Thank you. The next question is from the line of Aditya Khetan from SMIFS Institutional Equities. Please go ahead.
Thank you for the follow-up. Sir, my first question was onto the aniline price correction. So on quarter-on-quarter basis, aniline prices have dipped by around 12 to 15%. So have we taken any inventory loss in this quarter?
No, sorry. Which quarter are you referring to? Which quarter to quarter?
The quarter-on-quarter basis. Quarter-on-quarter basis. This quarter as compared to last quarter.
Okay. As far as the raw material cost is concerned, we have taken a price benefit. Raw material cost per kg has come down this quarter as compared to the previous quarter. So that benefit is already inbuilt in this results.
Okay. So we had not taken any inventory loss, means you mean to say that?
No, not much.
Onto the volume side, sir, I believe, sir, we are not sharing any sort of a guidance, but if you can so give us an idea, so whether the volumes can be in line with the tire industry growth or higher than that, or it can be like in the low single digit or high double digit range, or any sort of a trend that you can give, so that would be helpful for us to forecast.
So if you look at it again, I would put it as domestic and international. So when you look at the domestic market, we already have a reasonably high market share. So the growth will always come from plus or minus a bit more on the plus side of a few hundred basis points compared to the growth of the industry, because we have a sizable market share already. Whereas the growth in the international markets, where we have a much lesser presence, would significantly be higher. That's how we see it.
Okay. And sir, onto the debottlenecking, sir, which we have completed, sir, is it possible to share the capital expenditure figure for that?
Not material to be shared with.
It's within the capex budget.
It's not significant in absolute terms.
Aditya, are you done with your question?
Yes, I'm done.
Sure, thank you. Due to time constraints, we would take that as the last question. I would now like to hand the conference over to Mr. V.S. Anand for the closing comments. Please go ahead.
Yeah, thank you. Thank you very much. I'd like to take this opportunity to thank everyone for joining the call. I hope we've been able to address all your queries. For any information, further information, kindly get in touch with me or our strategic growth advisors and investor relations advisors. We wish you all a happy Diwali and a happy New Year. Thank you once again and take care.
Thank you. On behalf of NOCIL Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.